Dear friends, welcome to the second part of the video that we have discussed in Indian financial service. It is a second part of factoring. In addition to that, the concept of forfeiting is also going to discuss in this video. In the first part, we have discussed about the concept of factoring. So what are the advantages that we are getting for the situation of factoring? So what is the process of factoring that is going on? So how to manage your working capital requirements by using the situation of factoring. In this video, we are going to discuss about different types of factoring situation and how it will be benefited to the parties, especially from the part of companies, how they are going to benefit the factoring situation. Then there will be a comparison of two types of factoring. Then what are the advantages and the limitations of different types of factoring situations. Then the rules regarding factoring that is formulated by Reserve Bank of India, the committee appointed, and how the committee has given a recommendation for governing and management of factoring services in India. And there will be 17 recommendations are there. We will discuss that 17 points. Then who are all the major players of a factoring in Indian concept? We will discuss some of the examples of some of the factoring companies in India. So after that, we will go for the next topic, forfeiting, and what is the concept of forfeiting, how it will be benefited for international situations. So how it will support for international trade and all. Then the concept of a forfeiting in detail we will discuss. After that, what are the advantages of forfeiting, then how the forfeiting is working as a financial situation for supporting the various export companies and all. First of all, we will go for the first topic, that is factoring. Dear friends, welcome all of you for the second part of factoring video and forfeiting video. Let us move to the introductory part of factoring. I will briefly explain the concept and how the process is going on, and after that we will go for the rest of the things that we have not yet discussed in the first video. Welcome to the part 2 of factoring and forfeiting. Factoring is a complete financial package that combines the export working capital financing, credit protection, foreign accounts receivable, bookkeeping, and collection services. As we discussed in the first video, factoring is a support for management of working capital finance. So there will be a time lag of collecting the funds during the time of credit sales. Factoring is a type of financial services that will be helpful for supporting or assisting the working capital financial assistance during the situation of credit sales. It is a firm or a specialized financial institution that performs financing through the purchases of invoices or accounts receivable. So a factor is a bank or a specialized financial institution or a financial firms. So that will be performing some type of financial assistance or some types of financial support. That financial support actually for supporting the working capital requirements of a firm, or that will be supporting for efficient management of cash. So there will be a time lag during the time of credit sales. So factoring will be a solution for managing that time lag of a finance during the time of credit sales. Financial institutions is usually a bank that is providing the financial assistance for accounts receivable of a company. Normally the client will pay up to 80% of amount immediately on an agreement. So the remaining amount paid to the client from the factoring company when the customer pays the debt. We have discussed the concept of the amount of collection, payment and all that things. So they will charge some fee and they deduct the amount of advances that they have given to this particular company. So after that they will pay the amount to this particular customer or the particular company. Here let us see this is the company, and there will be a credit sale situations to the customers, and that time the factor will come, as factor or agent will come. They will give some sort of advances to this company since they are getting the cash from the part of customers, and when the due date arises, the customer pay the amount to this factor or agent. So when they receives the amount from customer, the factor will pay the amount to this company after deducting their processing fee what they have given already they have given advances to the company. So the balance amount the factor will give to this particular company. So this is the way the function of a factoring is going on. So the previous things we already discussed in part 1 video. Those who have any doubts regarding this topic, you can go and see the first video. All the concept, what are the calculations of factoring, the repayment situations, all these things we already discussed in the first video. Those who have any doubts regarding that one, you can go and see the first part 1 video of factoring that is available in this YouTube channel. So let us see what are the different types of a factoring situation, and the two types of factoring situations are there, that is disclosed factoring and undisclosed factoring. Disclosed and undisclosed factoring are the two types of factoring. In disclosed factoring, the client's customers are aware of the factoring agreement. So the client and the customers are client's customers are aware of the factoring agreement, and if it is not aware about the factoring agreement, so that is called undisclosed factoring. Here the client has to pay the amount to the factor irrespective of whether the customer has paid or not. So there is here the client has to pay the amount to the factor irrespective of whether the customer has paid or not. So if the customer is not paid or not, the client has to pay the amount to the factor in this particular situation. So these are the two types of factoring situations. Here the disclosed factoring can be classified into two types or two groups. The first one is the recourse factoring, and the second one is the non-recourse factoring. So disclosed factoring can be classified into two categories. The first one is the recourse factoring, and the second one is the non-recourse factoring. Let us see what is recourse factoring. Recourse factoring is an agreement between the client and the factor in which the client is required to pay back the unpaid bills receivable from the factor. So here there should be an agreement between the client and between the client and the factor, and agreement between the client and the factor will be like this, in which the client is required to pay back the unpaid bills that is received from the factor. So in case of credit risk situation, the credit risk stays with the client in cases of non-payment by the debtor. If there is any type of non-payment from the part of the debtor, the credit risk is always with the client. So that is the importance of risk cost factoring. In risk cost factoring, or it is otherwise called full resource factoring, the regular type of invoice factoring situation in which you sell your invoices to a factoring company, but you still remain the liable if your client is not pay the invoices. So this is the situation. It is sell your invoices to a factoring company, but still remain liable if your clients not pay the invoices. If the client is not pay the invoices, the liability will be with yourself in cases of a risk cost or a full risk cost factoring. Then when you sell your invoices through an invoice factoring, you receive your payment in advance even if your client are yet to pay the actual invoices. In this situation, even if your client is not pay the amount, you receive your payment in advance. That is the importance. And the factoring company is responsible for or they are taking in charge of this collection process in this type of factoring situation. There is some sort of payment dispute and all other unfortunate circumstances can happen that may be cause your client to fail to settle their invoices. So that is also the part of a risk cost factoring situation. For example, an invoice that you sold worth rupees 20,000 to as credit sales to a third party, only rupees 15,000 got by the client within the agreed period of time, you will have to pay the factoring company rupees 5,000 out of your own pocket. So factoring company is already giving the advances. So if there is some sort of default from the part of client, you have to pay the factoring company the balancing amount that they have already paid to you. That is, here 20,000 is the amount that you have the credit sales situation, and they repaid 15,000 rupees. So balance 5,000 you have to pay yourself to this particular factoring company. So that is in case of a risk cost factoring. Under risk cost factoring, you will have to buy the unpaid invoices back from the factoring company if such circumstances occurs. Like we discussed in the first, the previous example, let us see if some type of unexpected situations or they are not repaid that particular amount or unpaid invoices will be there. The factoring company, you have to pay the amount to this factoring company in such circumstances. That is the another thing in case of a risk cost factoring. Let us see what is non-recourse factoring. So in this non-recourse factoring, the client and the factor entering into an agreement. As we discussed, it is an agreement that is between these two parties, where the factor shall bear the obligation of absorbing those bills receivable within which remain unpaid. So it is the liability of the factor to bear the obligation of unpaid bill. So in the previous one, if there is some sort of unpaid bill, the company has to pay that balance amount to the factor. Here it is the responsibility of the factor to collect the unpaid bill. Thus, this is one of the advantages of a business. If there is some sort of unpaid situation is happened, it will never unaffected by the operations of a business due to unpayment of any type of invoices. It will never unaffected the proper running and functioning of a business organization, because it is the responsibility of the factor to collect that particular amount from the third party. So this is the situation of a non-recourse factoring. In non-recourse factoring, however, it is not become liable if the client failed to pay their invoices certain conditions. So if it is not become the liable if the client fails to pay their invoices under certain conditions. If some certain conditions, if they are not repaying the amount, it is not responsible. This appears to become more convenient option than recourse factoring. So recourse factoring is better option than recourse factoring, and more understood that there are conditions that must be met to be completely free of any obligation in the event of your client fail to pay up. So if there is something is happen for repayment situation without any commitment or obligation or something like that, it is a responsibility of the factor to collect the amount from the part of the customer. Let us see the advantages of the and the limitations of these two type of factoring. First of all, we discuss the advantages of recourse factoring. So the first and foremost advantages, it is easier and quicker to secure. So recourse factoring may takes little quicker and simply, because factoring companies does not have because any credibility for any types of repayment default, it is not at all the responsibility of the factoring company to collect the amount. So it is quicker than a non-recourse factoring situation. If something is happened, some default or something is happened from the part of the customer, the factoring company will get the amount from that particular firm. So that is why it is quicker source of finance. If you want to approach a non-recourse factoring, so many things are there regarding the default and all that things will be there. So they have to go through the background of the customer, only after that they will pay the amount. So this is much quicker than a non-recourse factoring situation. And this is more affordable. The price difference between the recourse factoring and non-recourse factoring may not be high. So the difference is not high depending upon the factoring company, but still the recourse factoring is cheaper. So recourse factoring is cheaper because the other fees and all from the part of the company, recourse factoring is much cheaper. This is because the risk factor of the factoring company is very less. As we discussed, the factoring company is taking very limited risk in case of recourse factoring. So that is why the formality or other things are comparatively less. That is the second advantages. And the third one, it is more flexible as compared to non-recourse factoring. So it is not at all flexible because it compared to a recourse factoring, it is recourse factoring is more flexible deciding how many invoices to sell. So it is depends upon the number of units that you have sell, the agreement that you have made with your customer and all that thing. It is very flexible according to the situation. So it is more flexible. That is the another advantages. So the limitation of the recourse factoring, in the first and foremost limitation is liable for all unpaid invoices. If any type of unpaid invoices are there, it is your liability to pay the unpaid invoices to the factor. So of course from the part of the company there should be a liability to pay the amount or invoices to the that particular factor if there is some sort of default from the part of the customer. And another one, it may cause the loss of asset. So sometimes a client may go bankrupt or fail to pay the huge amount. So sometimes maybe you there will be a sale situation from yourselves to a particular customer. That a client will go for bankrupt or fail to pay the amount to that factor. So it is your responsibility to correct the default and all these things from the that particular customer. So there will be a huge loss maybe going to happen in such situation. So that is also another limitations of risk-cost factoring. Let us see what are the advantages of non-risk-cost factoring. So here the most important thing is, as we discussed in the previous discussions, the transferring liability for unpaid invoices to the factoring company. So that is the most important thing. So if there is some sort of default from the part of customer, it is the responsibility of the factoring company to bear the risk or losses. So that is one of the advantages that we are seeing in case of non-risk-cost factoring. A factoring company absorbs the debt and you are free of any type of obligation to settle it. So if you are you have a particular company, you have taken factoring assistance from a factoring company, it is a responsibility of the factoring company to absorb the debt from the part of the customer, and you are free from any type of obligations and you don't want to settle it. So that is the advantages of non-risk-cost factoring. And the second one, it can improve your credit rating. So this is the second advantages. Invoice factoring allows you to have a steady source of capital. So you don't want to worry about your capital situation. You don't want to think about the repayment situation. So you can have a steady source of capital. So you can manage your capital, your work, especially in part of working capital situation, you can manage your capital effectively. This is an ideal scenario if you want to build a good credit rating. So non-risk-cost factoring is ideal for if you want to enhance or improve your credit rating situation. And the third one, it protect you when your client go bankrupt. So if when your client is going to become bankrupt situation, the level of protection that is given from the part of factoring company is the most important thing. So the factoring company offer under non-risk-cost factoring, you are giving maximum protection from the part of that is the factoring companies in cases of non-risk-cost factoring. So this is the third advantages of non-risk-cost factoring. Let us see some of the limitations of non-risk-cost factoring. So not all factoring companies offer it because the risk factor is comparatively very high. So that is why not all the factoring companies are not offering a non-risk-cost factoring, because it is very risky for the lenders, because they are all taking all the responsibility to their shoulders. So all the factoring company, they are not taking the responsibility of such type of factoring situation. They are taking entire responsibility to their shoulders, because most factoring companies only go to the risk-cost route. So they are preferring risk-cost because they don't want to take the responsibility of the loss of repayment. That is the first disadvantages. And the second one, it may not be ideal for a client to have bad credit ratings. So you have a client, those who are having with the bad credit rating, the factoring companies will never accept such type of agreement with yourself and your clients. So this is because your factoring company came to know that your client, your credit standard of your client is not good. Of course, there will be a situation of a factoring company to reject that. That is the situation of financing. So that is the another limitation that you can see in cases of a non-risk-cost factoring. So if your client have a good credit rating situation, only the factoring company will give you such type of a financial assistance to your company. So that is why that is the one of the limitation that you can see in cases of non-recourse factoring. Let us see the difference between recourse factoring and non-recourse factoring. So here, recourse factoring situation, the client is required to buy back the unpaid bill received from the factor. As we discussed the two things, the client is required to buy back the unpaid bill received from the factor, and it is the responsibility of the client to pay the amount. Credit risk is always with the client in cases of a non-payment. So it is always with the client in cases of a non-payment, in case of a recourse factoring situation. And in case of non-recourse factoring, it is the obligation of the factor. It is the obligation of the factor to pay the amount. So that is why the business will remain unaffected. So the business will never affect that situation. It is the responsibility of the factor to pay the amount. It will never affect the function and operation of a business unit. So that is the importance of a non-recourse factoring situation. So let us move. What is the situation of a factoring in India? So factoring, actually it is a recent origin. It is recently originated in India, and it has based on the recommendation received from the Kalyana Sundaram study group appointed by Reserve Bank of India in 1989. Then that is the recommendations of a Kalyana Sundaram study groups appointed by Reserve Bank of India. So based on the that is recommendations that is received from this Kalyana Sundaram study group, RBI issued guidelines for factoring services in 1990. Reserve Bank of India has issued guidelines for factoring services in 1990. The first factoring company, SBI Factors and Commercial Limited, was started in operations in 1991. Based on the recommendations of Kalyana Sundaram study group appointed by Reserve Bank of India in 1989, the first factoring company in India, that is SBI Factors and Commercial Limited, started its operations in April 1991. The main recommendations of this committee are: there is a sufficient scope for introduction of a factoring services in India. We should be complementary to the service provided by banks. So that is the first and foremost the recommendation. There is a scope for introduction of factoring companies in India. We should be a complementary to support and assistance for other financial services provided by the banks. So banks are already there in the part of supporting financial assistance for this type of companies and all. So this will be a supportive or assistance. It's a complementary for the financial assistance in addition to the financial assistance provided by the banks. Second one, the introduction of export factoring services would provide additional facility to the exporters. They are giving additional facility to the exporters. That is the second one. While quantification of the demand for factoring services has not been possible, it is assessed that it would grow sufficiently so as to make factoring business as a commercially viable proposition within the period of 2 to 3 years. So it can make the factoring services as a commercially viable proposition within the period of 2 to 3 weeks. It will become one of the important area in Indian financial services. That is the third recommendations given by this committee. And the fourth one, on the export front, there should be a fairly good availment of various services offered by export factors. They are giving various good initiatives in cases of export factors with a view to attaining the balanced dispersal of the risk factor. The factor should offer their services to all the industries and all the sectors in the economy. So they are providing financial assistance to all the industrial and all the sectors of the economy. And the sixth one is like this: the pricing of various services by the factor would be essentially depends upon the cost of funds. So the pricing strategies of various services, as we discussed, some fees or commission and all the things for providing such services, it is depends upon the cost of the funds or the amount of funds they are providing to this particular companies. Then the RBI could consider allowing factoring organizations to raise funds from the discount and finance house of India Limited, and also from other approved financial institutions against their usance. They are using promissory notes covering the receivables factored by them on the lines of revised procedures under the bills discounting schemes. So this is the another thing they have made seventh recommendation of this committee. And eighth one is the price for financing services would be around 16% per annum, and aggregate price for all the other services may not exceeding 2.5% to 3% of the debt services. That is the eighth recommendation they have given. In the beginning, only select promoter or promoter institutions or group of individuals with good track record, that is an important thing in financial services. They have a good track record and competent and they have a competency in management of this particular thing, as they are permitted to entering into this field. Those who are already proved their ability in that particular sector, they are only permitted to enter into this particular field. Initially, the organizations may not be promote as a the organizations may be promoted on a zonal basis. That is the important thing. Initially, the organization, those factors and the organization, those who are working, they are divided on zonal basis. That is the 11th recommendation. And there are distinct advantages in the banks being associated with the handling of a factoring business. There are distinct advantages. Banks, they can associate with the handling of a factoring business. So factoring activity could perhaps to be taken up by the Small Industries Development Bank of India, preferably in association with one or more commercial banks. So that is the 12th recommendation. And 13th recommendation is the business community should first be educated through the banks branches about the nature and scope of these services and benefit benefit acquiring therefrom. So that is the business community, they want to educate it how this factoring function is working and what are the benefits that they are acquiring by using that ones. That is the 13th one. And the last one is factors cannot be extended their services efficiently, effectively and economically without the support of the companies as quick and dependable means of communication. So that is the last recommendation that is given by this committee. So these are the 14 recommendations that is given by the committee to RBI. So based on which they have started the operation of a factoring in India. So in addition to that, there will be 15, 16 and 17 are regarding the central government and RBI initiatives to appropriate measure for a setting up of specialized agencies in credit rating situations. And suppliers would be able to obtain financial services from both banks and factors. It is necessary to provide their proper linkage between banks and factoring organizations. And the small scale industries, especially in the part of small scale industries, factoring could be a mutually benefited both the development of small scale industries. They are giving financial assistance for support and development of factoring industries. From the small scale industries, the factors are giving financial assistance and support for the development of factoring industries. 15, 16 and 17 point is regarding what are the financial, especially the financial aspects and regarding the factoring situations in India. So these are some of the 17 suggestions that is given. 14 suggestions are regarding the general things, and 15, 16 and 17 regarding various sectors, especially from the point of view of RBI, small scale sector and all that things. So 17 suggestion is given to this committee, to this particular initiative, especially they have given these suggestions to RBI for starting factoring companies in India. So based on which some of the factoring companies that is working right now in India, they are SBI Factors and Commercial Service Private Limited, that is one, and another one is ECGC, that is Export Credit and Guarantee Corporation of India, Penta Consulting Private Limited, HSBC Hong Kong Shanghai Corporation Limited, Can Bank Factors Limited, AVS Financial Services Private Limited, Dave Growth Links Reliance Capital Limited, India Factoring and Finance Solution Private Limited. So these are all the some of the factoring companies that is there in Indian situation. So let us conclude the situation of factoring. So we have discussed two types of factoring situation, and risk-course and non-risk-course. So we compare the situation of risk-course factoring and non-risk-course factoring. Then we have discussed the concept of factoring in India. So the recommendation of the committee, and 17 point we have discussed 14 main point and 2 points related to 3 points related to the situations of RBI and small scale industries, how the small scale industries are benefited with the situation of factoring and all. So 17 points recommendations are there. So based on which we have started some factoring companies. We discussed some of the factoring companies that is there in Indian situation. Let us move to another topic, that is forfeiting. So forfeiting is the term that is originated from the old French word forfeit, which means surrender one's right of on something to someone else. It is the forfeit is a word, French word, the meaning of which is surrender one's right on something to someone else. This is the meaning of the word. In international trade, forfeiting may be defined as the purchase of exporter's receivable at a discounted price by paying cash. The purchase of the exporter's receivable at a discounted price by paying certain amount of cash. So this is the concept of forfeiting in international trade. By buying this receivable, the forfeiter frees the exporter from credit and the risk of not receiving the payment from the importer. So in this situation, the forfeiter frees the exporter from credit and the risk of not receiving the payment from the importer. So that is an important thing in case of forfeiting. Forfeiting and factoring are the financial services in international market given to an exporter or seller. The main objective is to provide smooth cash flow to the sellers. The basic difference between forfeiting and factoring is that forfeiting is a long-term receivable over 90 days up to 5 years, while factoring is actually given for a short period of time within 90 days and is more related to the receivable against commodity sales. So this is the difference between the factoring concept and the forfeiting concept. So in cases of a forfeiting, a types of financing that whereby banks give an exporter cash up to front so as to guarantee the payment to them. So this is the type of finance used primarily when export traders deals with high risk countries. Normally when you have a situation and dealing the risk factor of exporting is high. So forfeiting is a types of financial assistance that is given when the risk factor of export trade is high. In forfeiting, the bank advances cash to an exporter against the invoices or promissory note guaranteed by the importer's bank. So it is a financial assistance that is given to the exporter based on the promissory note guaranteed by the importer's bank. The amount advanced is always without recourse to the exporter and is less than the invoice or not amount as it is discounted by the bank. So that is the another important thing. Discount rate is depends on the terms of the invoice or a note that they have given and the level of the associated risk. So it is the amount that the rate that they are given is purely based on the risk factor. Especially in case of export situation, the risk factor is very high. The amount that they are given in forfeiting situation, the amount that is they are given advancing situation is purely based on the associated risk factor of that particular situation. And here the cost of forfeiting, there will be two types of cost situations are there. One is the commitment fee that is payable by the exporter to the forfeiter, that is a situation. So that is the first one, and the discount fee is payable by the exporter for the entire period of credit involved and deducted by the forfeiter from the amount paid to the exporter against the availed promissory note or bill of exchange. So that is a discount fee. So normally there will be a discounting process of promissory note or a bill of exchange. So the fee that is in that part there will be discounting fee and there will be another commitment fee. So these are the two important fees situation that is in cases of forfeiting. So some of the advantages of forfeiting are, it is 100% of financing. There will be financial assistance that is given, 100% financial support and assistance of in case of exporting and all, they are giving that is supporting and assistance are there, and it will enhance or improve the cash flow of a business concern. And the third one is it reduces the administration cost factor. So the first one, it will be 100% of financing situation, improving the cash flow of a firm, and it reduces the administration cost factor. It reduces the cost of administration while managing the receivables. And the fourth one, it is advance tax refund. So it provides verification of export and get tax refund situations in cases of tax payment situation. There will be a situation of a tax refund, and you can reduce the risk factor. You can reduce the volume of risk factor. It will help for efficient risk management process. You can easily identify the risk factor, evaluate the risk factor. You can take the measure for a risk factor. This is one of the way for reducing the risk factor. And the next point is, sixth point is increasing the trade opportunities. You have a international trade opportunities, you have a cross-border trade opportunities very freely. So he can go for any market all over the world very freely. So you have facilities like this. Even if your credit period is, length of your credit period is, your operating cycle length is very high, you can go for an international credit, international marketing situation, international sales situation by this forfeiting method. So that is the another advantages. So these are the 6 advantages of this one. And here in this video we have discussed 2 important terms. It is the first one is a continuation of the first video, factoring. So what is factoring, what are the different types of factoring situation, classification of factoring, then factoring in advantages and limitations of each type of factoring, discourse and non-discourse factoring. Then it comes to the factoring in India and the committee guidelines given and the 17 guidelines that we have discussed, committee guidelines and the 17 guidelines that we have discussed. Then the end, what are the different types of factoring companies, important players in Indian market situation. Then move to the forfeiting situation. What is forfeiting? What are the advantages of forfeiting? What will be the benefit that you are getting from forfeiting in an international market situation, international trading situation also. So international marketing, international trading, how it will be supporting for international trade forfeiting. So that's all regarding this video, and thank you all for watching the video, and see you in the next video with another topic. Thank you all.